And again, I really want to say a huge thank you for you guys for participating and joining us today on this beautiful Thursday. And I guess anywhere in the world is really beautiful, even if it's raining or not or hot, right? Because we have a chance to enjoy the weather and just to be around and just enjoy life, right? Enjoy everything, especially in this crazy time right now. So today I want to talk about, oh, hang on, can you guys see it? There we go. About the breakout trade. I don't know if you guys actually utilize this incredibly powerful, incredibly amazing trade setup, which could be done on any market at all. And I want to be able to talk about how you could understand it and spot it. Because if the real reason, the reality is, I should say, if you don't have your charts set up properly with a proper way of looking at it, how are you ever going to be able to take that trade, right? So today I want to show you exactly what it's all about. So hi, I am Marina, the trader chick. That's me, and that's one of my little boys. And today what we're going to be covering is understanding market movement, because if you don't really understand market movement, you can't really spot any trade, right? It doesn't matter which trade you're looking for. Using the indicators and entries for the best entries and also for the targets. Profit targets are something that people completely overlook, but they are literally as important as your stops. Why? I cannot even tell you the amount of times I hear people, oh my God, the market was going my direction. I just wanted it to go a little bit longer. And next thing I knew, I removed my profit because I wanted to go higher. And boom, it turned on me and stopped me out. Because the reality is, trading is a mental thing. It is a very egocentric thing. And greed is a huge part of it, right? Greed, we always want more. We always want more. So having your profit targets in place and getting filled sometimes is more valuable than going for that bigger target and not getting it. Okay. And then obviously identifying and profiting from the breakout trades and also other setups. But today I really want to focus on the breakout, and you could use a lot of that information for that. Also, scalping. I personally am a scalper, and I will be talking a little bit more about how I use my scalping strategy for pretty much all my trades all the time. All right, official intro time. So who am I? I am an expat. I live in Antigua, Guatemala, and I am in Guatemala at the moment. I don't know if you guys could hear all these bird sounds, but we go to a beautiful farm every day for my kids to distance learn with their friends at the farm, because we can't be in school. So it's been just a great way to get out of like the house, because we have been on massive lockdown. I don't know about you guys, but Guatemala had serious lockdown. And I know that comparison to other countries that didn't have massive lockdown, I don't think it matters, because our numbers are still skyrocketing. um, it's just, you just have to always take precaution no matter what you do. Regardless, I am also trilingual. I am actually a refugee from the Soviet Union. I arrived to the United States actually over 42 years ago now. So I do speak Russian. I was born in Soviet Union, so I do speak Russian fluently. I am English is more of my main language, because I was raised in the United States since 6 years old. But Russian is like my native language, I guess you could say. So I do speak it, but English is my predominantly favorite language to speak. Me and my family have now been living in Central America for over almost 20 years. Um, my husband is Guatemalan, but before moving to Guatemala, we lived in Costa Rica. So my kids actually have never been raised in the States. They are Central American kids. So, anyways, I also speak Spanish fluently. I am trilingual. And one of the reasons why I bring this up is because being trilingual kind of helped me understand one important thing, is that the market actually is a language. And I think because I've learned new languages in my later years, rather than only when I was 6 years old, I recognized that. And once I recognized that, it really ended up helping me a lot. We also travel a lot. At the moment, we're not able to. It's kind of been driving me bonkers. Our airports have been closed since March. Before I became a day trader, I was a fitness instructor. I actually lived in around Manhattan and trained all sorts of fitness throughout Manhattan gyms. I'm one of the pioneer spin instructors and Pilates instructors. Um, and then after that, I became a travel writer. I actually still own this travel site, Travel Experta. You can still find that, because travel is a huge part of our lives. I started this way before my day trading, and I still have it. It's a different business model than when I first began, but it talks about our travels. So today, what I'm going to be talking about is mainly the 4 basic strategies of learning how to understand what the market is telling us. And that is what's going to help you understand better about the breakouts. Because this is the deal. The market speaks to us. Like I mentioned earlier, the market actually has a very specific language, right? It's kind of like when you're getting into a car. I know at the moment, the majority of you have been driving for years, but I'm in the very lucky position that my 16-year-old is learning how to drive. And it is literally a new vocabulary for him. It is all new for him, right? Where are the brakes? Where is the clutch? Where is the gear shift? Where's the accelerator? What do you mean by reversing? All these are words that he doesn't understand fully yet, right? But for us, they're automatic at this point, right? They're normal. And when we get into a car, we don't even think about these things anymore. That's the way the market works. Once you are understanding the automatics of the market, you'll be able to also start to understand much better about everything and how it goes into play. Everything. Larry, life is about trading, because if you do not know how to control your charts, I can guarantee you a total bore will be when you are losing your money, and you will understand why. Because if you don't know the basics, Larry, I can guarantee you, where is your biggest problem? I can guarantee you right now that you will find out what that is. So if you're bored, you are totally welcome to leave. Absolutely. But if you guys do not understand the basics, if you do not understand where there's a sideways market, where there's a channel forming, if you do not have your resistance and support areas, and it's like getting into your car without your seatbelt. So up to you. You're welcome to stay. You're welcome to go. But the reality is, when you find that resistance, that means that that's where you need the most amount of learning. All right, guys, let's continue. So what I did is I made a worksheet. I created a worksheet that you could follow along my entire presentation. And it's actually a worksheet that I pretty much use all the time. So you could go to makingofadaytrader.com and you could download the worksheet right now totally for free, and we could use it together with my presentation. So this way you'll also be able to understand what I'm talking about and then be able to go over it as well. Makingofadaytrader.com. Okay. And again, this worksheet is going to be going along with the presentation, so it will really, really help you. Getting back to the basics, building your trading foundation. All right, so what are the basics of trading? First of all, I want to show you my platform. I used to trade off of 3 different monitors. It was a mess. I had over 10 different indicators going on. It was crazy. And after I had massive losses and trying to go after these huge targets, I had to stop and come back with completely renewed eyes. Basically, kind of get a new perspective, I would say. And I ended up going back to just my naked charts, but eventually I recognized that I need a couple of indicators. And now today I only use 2 indicators. I only use the EMA lines and I use the MACDs, because us traders, we cannot just go in on naked charts. We cannot just go in where there's a long candle. I know a lot of people say that, oh, that candle is strong, I'm going in. That is absolutely crazy. Imagine us as archers walking around and aimlessly throwing our arrow at a target. And sometimes there's not even a target for traders, like I mentioned before. So as archers, we have to stand in a spot and we have to have a place to throw our arrows. Our indicators are exactly that. They tell us everything. Where to take that trade from, where to enter, and where to exit as well. And that is done through the indicators, okay? So my MACDs, I use the EMA lines for my entries, but my MACDs, I love the MACDs. They are my absolute favorite. And why is that? Because they are the least lagging indicator that I have yet found. They tell us when there is weakness way before the market already is showing that weakness. And we as traders never, ever want to be on the side of the market when there's any sort of weakness forming. We always want to be on the side where there is a massive strength and movement. And if you don't understand how to spot that, you're going to always end up on the wrong side. So, like I mentioned before, I created a workshop for you to follow along. Go for it right now. Go and get it. Making of a daytrader.com. I will give you guys a couple of minutes. All right, let's continue. All right, market movement and the breakdown of a trend. So here's the reality. The reality is we know that there's an upward trend. We know there's a downward trend. And we logistically know that there is a sideways trend, right? We know we understand it. But why is it that the majority of the money that traders end up making during the day all gets given back during sideways markets and sometimes even more? Do you guys know why? Because this to me is literally the trader's worst enemy. And if you don't understand it, if you cannot spot it, you will not only be losing money, but you'll also be missing out on the transitions and on the breakouts. So what are trending markets? I want to give this to you even more. Basically, this is going down, sideways, going up, right? We understand what an upward trend is. It's each pivot is higher than the other pivot. If you don't know what a pivot is, it's when the market retraces and then continues. It's these little movements right here, these little upside down V's. Those are pivots, and each pivot is higher than the next one. What is an upward trend? You could call it a bull market. You could call it going long, buying, whatever you want to call it. It's all the same thing, right? It's an upward trend. Buying is when we're looking for buys in an upward trend, right? However, what's a downward trend? And if you're a day trader, intraday, I'm not talking about swing, I'm not talking about investors, I'm talking about intraday trading. You can make just as much money going down in a downward trend as you can in an upward trend. There should be absolutely no discrimination between the two, because money can be made in both. It cannot, though, be very well done in sideways markets. So it's a downward trend. Basically, each pivot is lower than the pivot before. It's pretty easy to understand. It's when you're looking for a short, right? When you're entering at a higher price to get out at a lower price, and then you take the profit in between. Basically, you're shorting the market. It's a bear market, whatever you want to call it. That's what it is. Now, I mentioned earlier that I am a scalper, so I also like immediate momentums. What is that? So overall, we have a certain movement going up, but sometimes we'll have mini trends, right? Because I don't know if you guys know what scalping is, but it's mainly going for smaller profits with smaller risk. So what is that right here? This is a mini trend, and I could really optimize and monetize a mini trend because I have my indicators set up in that proper way that I could optimize and at least get one good trade before the immediate momentum can end. Because if the overall momentum is strong, it could give us a deeper correction, which gives us a mini trend, and then it'll go back. And when it goes back, I'm already prepared because I know that it was the overall momentum was different. All right, so now I'm going to jump into the really important stuff here. Steve, what charting time frame do you prefer? I personally use the 6-10 tick chart. I do not use a time frame because I don't know if you guys know what tick charts are. They are transactions. So each one of my bars has 610 transactions happening in that moment. What does that mean? Basically, you have in real time volume. Okay, it's one thing to look at a 1-minute chart or a 5-minute chart and then put in a volume indicator. I don't know if you guys have ever seen that, but they are always lagging. Always, just a little bit, but they're lagging. You don't really know the real time number. However, with the tick charts, that's the beautiful thing, is you have right there in front of you what is happening in the moment. And if it's a lot of volatility, those candles are moving fast with those transactions However, if it's slow volatility, you could actually see it happening right in front of you. Once we go to the live market, I'm going to show you my live charts. I will show you how I use the tick counters all together. Okay, consolidation markets, sideways markets, channeling markets, indecision areas, exhaustion patterns, they are all the same thing. They are all identical, okay? So what are they? They are a place of indecision. They are a place of where the market isn't sure what to do. It's either, do we go up? Do we go down? Do you, as individual traders, as retail traders, somebody who's probably going in with a pretty small position, do you really think you can manipulate the market? You can predict the market or beat the market in those areas? I'm going to break it to you right now. Absolutely not. You will never, ever beat the market. What you can do is work with the market. So what's really important about these areas is there's certain things. One is you have to understand there are three super important positions in the market. One important position is know when to enter for your good trade. Two, knowing when to exit that trade. If it's good or bad, but it's valid, you should be able to know exactly when to exit. However, the third, and I say the most undervalued and the most important of all, knowing when to stay out. Because if you know when to stay out of bad trades, you will be saving so much money. Consolidation areas, indecision areas, these transition areas, this is when you have to know to sit out. You have to know when to sit on your hands. So I'm going to explain to you what happens during these consolidation areas. And the thing is, as I mentioned before, trading is such a mental, such a mental thing, right? I don't want to say mental game, but I guess it is, right? It's so mental. It's so ego driven. And what does that mean? It's stories. We tell ourselves all these bullshit stories, right? And that is what makes us do so many weird things in the market, because once we get our once we, like I was going back to the car, once we sit down, buckle it in, we know what to do. We don't have to tell ourselves stories because we have the basic setups going on. So what is the story going on here that happens pretty much to the majority of traders until they really have their strategy happening? And this was my biggest problem. And I know that people get caught in the chop all the time, and I hear the same story. So here's what happens. Two different scenarios. One, there are two different types of traders. Also, we've got the trend is your friend type of trader, and we have the contrarian trader. So what happens with a friend is your trend, wait, trend is your friend trader? When they see this upward trend going and all of a sudden the market is in this exhaustion pattern or this consolidation area, this is what's going through their heads. These stories, you know what, the market's been going up all day, it's going to go up, I'm going in for a long. Now, I personally was a contrarian trader. I always looked for the corrections because I always said, you know what, the market cannot continue in the same direction. It's got to correct. And that's what I was doing. Whenever I was seeing something like this and then the consolidation area, I was being like, you know what, the market's been going up too much. It's time to correct. I'm going for a short. And guess what? We both lose because the market is going to do what the market is going to do. But what we as traders have to do is sit out. This is when we have to give the market a break to do what it's going to do. And that's what you have to understand. So what do these consolidations areas look like? Because when we're in the live market, we don't know if it's going to continue up. We don't know if it's going to continue down. All we know is that there is now significant areas and there's a lot of indecision and a lot of choppiness and bouncing back and forth. Or a lot of people like to call it the chop, right? Choppiness, chopping back and forth. Okay, we could have mini consolidation. So you, guess what? You sit and you wait through that to happen until you have real confirmation of what's going on. Okay, this is when people are like, wow, you're so patient, you're so disciplined. Absolutely not. I know when I'm sitting at a red light, and if there's a red light, chances of me being pulled over if I decide to run that light or hit another car are much higher than me actually making it out crystal clear. Why would you want to do that? Why do you want to give away your money? Like, this is what I don't understand. Traders, all of a sudden, when they're in the market, or I shouldn't say traders, newbies, aspiring traders, want to just give their money away to the market without having any real strategy. I don't understand that at all. This is giving away the money to the markets. When you're in this area, there's no guessing. You never want to guess. You want to be 100% sure after you see the indicators tell you what you're going to do. This is a sideways market. You stay out. That's pretty much it. So how do we how do we recognize those areas? How do we really mark them? And that is called support and resistance areas. Look, the market, it respects areas. It respects areas. And we as traders have to respect what the market respects. Okay, now, what if you have no idea what your areas are? So back to the basics. You have to know where your seatbelt is in your car. You have to know how to draw in your support and resistance areas, because without them, you're screwed. You cannot continue because you have absolutely no protection for you. Because support and resistance areas are areas that the market really respects. And sometimes you could have massive runs like right here, and boom, it hits an area and it could turn on you. And it could do that in the middle of a strong channel. You do not want to be in that until you have massive confirmation. All right, so what are support and resistance areas? Resistance area. What is a resistance area? It's literally the ceiling. It's a ceiling of the trend that is happening right now. I don't care what happened a month ago. Everything is right now. This is where my upward trend has now started to hit with at least 3 or 4 hits. That is a strong resistance area, right? It could stop the trend or it could give us a breakout. But if you don't have this drawn in, how are you going to recognize any of it? And let me tell you, you're going to say you put in a mental resistance. It's the same nonsense as telling yourself you're putting in a mental stop. None of that works, because when you're in the live market, when you're in that live trade, your testosterone, your adrenaline is pumping and nothing makes sense. So you want to make sure that everything to the left of you is drawn and telling you that you are in that right position. And that is drawing in resistance, ceiling. This is the ceiling. Now, like I said, I'm a scalper. So basically, I only trade about 1 hour per day, an hour and a half max, because that's all I can manage. And it hits those areas, right? So this is about an hour and a half. Now, I've had this mini, remember I was mentioning that mini trend, that immediate momentum, it failed, continued, but I also have a resistance, and boom, it hit that resistance. I have to know why it's not going anymore, but all I have to do is look to the left. Oh, of course not. It's a resistance area, and that's what it is. Resistance areas is when the market is hit several times in the same exact location, and it respects that area. Now, what is a support area? It's literally the floor of the ceiling. Okay, it's literally the floor. So you're headed down, boom, all of a sudden it's hitting back and forth, hitting several times. It's stopping that trend. It could continue, it could break out. I have no idea, but I also know that this is a very important area that has been respected over and over and over again. It's a channel if you look really well, but we're not going to go there right now. Right now, I want to focus on the support area. Support area, okay, where the market hits the floor over and over and over again. Okay, so if it stops the trend, it's a strong area, right? But it could also revisit that area. And we want to be prepared when we are revisiting that area. So here is that channel, right? That bounce back and forth in between resistance and support area. It also stopped the trend, right? So it stopped and then it continued. And that's what we're going to talk about a lot more when it comes to it, about the breakouts. But here's the deal. If you guys don't know where your support and resistance area is, how are you supposed to find one of the most profound, powerful trades, right? If you're not drawing that in. So this is a support. This is a resistance area. Start drawing them in. They will save your life. I guarantee that. I absolutely guarantee it will completely take your trading to a new level. All right, this is what they look like. We could have a resistance area, drop, we have a channel. It's okay if it moves, but you have to recognize that. You have to understand all of that. So here's the other thing. How do we recognize, so how do we start to even recognize when the support and resistance area actually starts to happen, right? Because that's really important. If you don't understand when it is about to happen, you'll miss it. So how do you start to recognize these? I'm sure all of you have heard about reversal patterns, right? We have the double tops, we have the triple tops, we have the double bottoms, we have the triple bottoms, and we also have the head and shoulders. So this is that beginning of either a transition in the market or the support and resistance area forming, which usually could lead to a transition. Now, when you couple it with divergence, and right here, this is when the MACDs are so important, because this is when it's telling us when the market is starting to lose the strength, and that's through divergence. When your pivots are headed up and your pivots on the MACDs are headed down, that is a huge indication that there is weakness in the market. And you have to understand that. And that is reading the market's language. That is listening to the market. Okay, so double bottom right here. Look at that divergence on the MACDs. Do you guys see that? Look at that divergence. It's a complete perfect double bottom. The two pivots are touching each other, yet my MACDs are telling me that there's massive strength being lost. And guess what? It actually changes direction. If you guys have to do your back testing or the due diligence, however you want to call it, you will also recognize that divergences are probably 90 to 95% correct about the market potentially changing direction. And that's the most important thing. Okay, again, reversal patterns. They are also the very beginning of support or resistance areas, because it doesn't matter which side it's on, right? Um, no, I only look, Eric, I only look at the balls. I have removed my um, average and my difference. It is just too much noise. They are useless. You do not need a lot of indicators, guys. You can literally really simplify your trading. I one chart. I use one chart. So yes, this is the only one I use. I use the most basic universal setups. I will show you guys as well when I show you my live chart as well. Okay, so like I said, reversal patterns are amazing for telling you already that there's a potential of changing. However, it is also showing you the beginning of support and resistance areas, right? Like right here, this is a triple top that turned into a pretty significant resistance area. And then look at all this massive divergence. This is not difficult. You don't need to spend hundreds of thousands of dollars on softwares, because it's right there. It's universal free indicators, and that's all it is. Remember, even if you guys just joined us, I made a cheat sheet or a worksheet that followed along with this presentation, but then you could actually keep this presentation all the time and go over it. And it's literally something that I use to this day to help me recognize a lot of stuff, right? So go to makingofadaytrader.com. Makingofadaytrader.com. All right, so let's talk about the breakouts, because that's what we're here to learn about, right? The breakouts and how to spot a valid breakout. All right, so hang on a second. I need to get some water. All right, before I explain the breakout, I think there was a question here. Okay, I think I answered them all. All right, guys, what's a breakout? All right, now that we understand the absolute importance of resistance and support areas, how are we actually going to identify a breakout? So here's the thing. Let's picture this in our heads. You guys, you get in your car and you are about to go and visit your friend that you have visited hundreds of times. You are super confident with the road. He lives directly north of you. Get in your car, you're driving on that highway that you're totally familiar with, but wait, all of a sudden there's a construction site ahead of you. And the construction worker is telling you detour. I don't know about you guys, but I get really flustered and I get really stressed when I am in a detour. Why? Number one, there's been many times that they forgot to continue with a detour, and here I am in an area that I don't really know. Two, I don't know where I'm going, and what if all of a sudden I get to that area and the construction worker is like, you know what? It's not happening. We can't fix the road. You got to go back. Just head home. Again, there's no detour. I'm freaking out. Or the other thing is they finally say, you know what, we can't exactly fix that road, but just take this a new road, completely new road. I'm in totally indecision area. I'm like freaking out. That is your channel. That is your sideways market. That is your indecision area, right? That is where you put your support and resistance areas. But all of a sudden, the construction guy is like, you know what? The road is fixed. Here's back, getting back. The detour was perfect. Get back on the highway, and what happens to you? Boom! You are like lifted. You are back to your confidence level, right? And that energy, and you just press on that accelerator and you go. That's the breakout. It is literally breaking out in the same direction, and it is with enthusiasm, because at this point, we have been sitting in this indecision area in this stressful moment where the majority of traders end up losing all their money. And by the time the breakout arrives, they've actually probably emptied their accounts, or they're done with their threshold of losses for the day. So this is it. This is when you have to sit and wait, because the breakout is going to come, or a transition is going to come. That is going to be decided later. But we're going to focus on the breakout. All right. Like I said, you're getting in the car, you're driving north. All of a sudden, it's a detour. It's a construction site. You have to go east. You have to go to the right. Boom, you're freaking out. Am I going? Where am I going? Boom. All of a sudden, hey, it's all good. Get back on the highway. You're headed to your friend's house. You're continuing. This is what a breakout looks like. Right now, I'm showing you only headed up, but it's identical going down. There is no difference if you're going up or if you're going down. So once that breakout happens, that's when I start to look for my entries. Okay, and like I said, I use my EMA lines for both the entries, and also for me to understand exactly how it goes. I use the EMAs for my entries and my MACDs without the divergences to show me where there is massive strength. As you can see right here, the MACDs, this is the zero line. And from the zero line all the way up here, this is where that strength is. Okay, this is where the strength of this movement is. No divergence, it's retraced back. This is that breakout. Now, as I mentioned before, I want to show you guys a bonus as well, because breakouts are important, but you also can use your support and resistance areas just as powerfully for the transitions, the transition trades, when you're changing direction. Because again, when you're changing direction, it's a new trend, and that's usually where the most amount of strength is. But if you don't have your areas drawn in, if you don't know where there's a reversals, you don't know where there's transitions happening, how are you going to possibly know where to enter this particular trade, right? All right, so here we've had an area that's moving up. We've had a pretty significant resistance area, also a mini support area. Wouldn't really think of it that much of an area. And then boom, it changed direction. This is that move, that change. That is what I call an instant reaction trade, right? It's when you're entering a new trade, a new trend. So um, as unlike unlike a breakout trade when we've already been going in that trend, now it's shifted direction and the momentum is starting to flow to the other side. How long? We don't care, but we want to know that it's strong enough to head down. Okay, here's another good example of a transition. It was going up. You can see that my EMA line is kind of curved, going up, boom, right here. And it changed direction. This is actually a decent support area, which formed a channel, and then boom, it broke through. Look at that massive movement. Look at that. It didn't even come close to there. That's where I would enter my trade, because my EMA lines is where I enter trade. All right, now remember, making of a daytrader.com, you could get pretty much the entire presentation, literally what I use for when I trade. My cheat sheet, it's completely free, making of a daytrader.com. All right, now let's get into the live analysis. So what I'm going to show you guys here is how I look at my charts overall. Okay. Okay, hang on. Actually, I don't think you guys are able to see my charts, right? Let me share the chart. Okay, are you able to see my charts? Just send me a quick holler, please.
Yeah, it's back to the charts now.
Okay, great. All right, guys, so let's first talk about my actual charts, all right? And this is a really good time for you guys to ask questions about the chart, because I know that a lot of you probably have not really seen tick charts. Just so you understand, tick charts are as common and as normal as 1 minute charts, 5 minute charts, or any minute time frame. They are very common, and every single platform has tick charts. So this is nothing spectacular or different, okay? So what is tick charts? I'm gonna just show you right here. I'm gonna get in a little bit right here. All right. You see what this is right here, this candlestick? Hang on 1 second, my computer just did something weird. Okay, so right here, these are candlesticks. And as you can see, I have the actual tick counter right here. So this is my live volume, telling me the live volume of what is happening per bar. And that is the coolest thing of all. You see that? It's giving me the live in real time volume. It's indications showing me what is happening right here in that moment. All right. So this is awesome, as I could see what is actually happening. Now, you can see right here, there was some massive erratic behavior. This is not normal. So when you start to see a bar do something like this, stay out of the market entirely, because there is no real reasoning behind why it does that. So what I'm going to show you guys is pretty much how I sit down and look at my charts daily. Yesterday, I don't know how many of you guys have been watching the markets. Yesterday was, the highest that the S&P has ever hit in the history of the S&P, which is pretty freaking amazing, right? So what happens when the market hits new heights? It pretty much retraces. Why? Because people are scared. This is unknown territory. They are nervous. It's also a pandemic happening here. So if you guys were in the markets yesterday, they were pretty crappy, right? And then today, the fact that they're headed down, it's a very common thing. So you also have to understand the way the market moves. And then after it does its mini retracement, then it could continue on. And kind of like, it's after, like, I don't know if you guys ever heard that story, that nobody ever believed that somebody could do a 4 minute mile. And then once the first person who broke the 4 minute mile, there was like 100 others that followed. So it's the same thing, right? We're hitting these new grounds. A lot of people don't believe it. Boom, all of a sudden it's going down, and then it's going to head back up and could break through that 4 minute mile barrier, right? Um, so today the market was a little bit stagnant in the morning, and now it's starting to head back up, which is kind of cool, right? It's kind of getting that confidence back. It's kind of doing that movement back all together. All right, let me just see some of your questions. What is that zero, Ray? I don't know what that means. Ticks are not bid ask volume contracts. No. Okay, tick move in. Okay, so Macus, I think is how I pronounced your name. All right, so the thing is, okay, I trade the ES mini futures. And the way the future is, when you're talking about the breakdown of points, it's also broken down into ticks. Unfortunately, it's very different, because you could use a tick chart for any stock, for anything. It's literally just showing you transactions. That's what is a tick chart. However, each point is broken down into ticks. So each point in an ES mini for one contract is worth $50. It's broken up into 4 ticks, which is $12.50 each. Okay, does that make sense? I know that it could get a little bit confusing with ticks in the contract and then ticks in the tick chart itself. Okay, so This right here is a tick chart, and we're looking at the actual candles to see the amount of transactions. It should just be called transaction chart. I don't know why they call it tick chart. Okay, so does that make sense, Marcus, of what I just, and any contract does not tell you how many contracts traded. Oh, another thing is, no, it doesn't. All it's telling you the amount of people entering. It's people. Some of these people could have hundreds of thousands of contracts at one time. Some of them could be like the smaller retailer with one contract, but it's just transactions, right? So it's not the amount of people entering altogether. All right, so here is how I start my day and how I frame my charts. Again, I use only these two indicators, nothing else. So I start to draw in, oops, hang on a second, what just happened here? I start to draw in my areas. This is a pretty significant, okay, something is not working here, hang on. There we go. There we go. All right, this is a significant support area, right? It's hit it one, it tried to, it didn't really, it wasn't really an area just yet, but here it started to hit it 1, 2, 3, 4, 5 times. So for me, that's pretty significant, right? Now, I have this mini resistance area that was broken through, right? So here we go. And then it broke through. So we would be looking for that breakout trade right here. I do like to move my resistance areas with what is the more predominant pivots. And to be honest with you, right here, right now, I am looking at a pretty significant breakout move, right? However, I also like to make sure that I have everything in place. And I am seeing a pretty significant divergence. Okay, so for me, I'm seeing a divergence. I'm seeing that between these two. However, between this pivot and this pivot, it's a little bit better, right? However, I do want to make sure that I am focusing on everything that is happening in that moment right here. All right, now, here's a good example of a very strong channel. And like I said before, this is almost an hour difference from here to here, and it did revisit that area because the market visits areas over and over again. And this was yesterday's chart right here, right? So when I started to see the market starting to hit here, because it started to go down, it started to hit here. I'm still not really that worried about an area until I'm seeing it right here over and over and over again. And what does that mean to me? I've had this pretty strong move down. And let me remove some of these. This is from my yesterday. It's trading. Okay. So trading down over and over and over again. And at the moment, oh, wait, this is showing me that it might have changed direction entirely. I probably would be looking for a change in direction trade. Absolutely, right? Because I love the immediate momentum trades. My mouse is just died. Oh, yeah, it totally died. Hang on a second. Oops. Okay, let's see. There we go. All right, so we have a pretty, oh, forget about it. No, I don't know what is wrong with my mouse. All right, let me do this then. All right, so remember I was talking about that immediate momentum. We've been going down for the whole day, for that whole time. Like, I only like to look at the shorter term, and then all of a sudden it's showing me an immediate momentum. So I would be all over these trades here, bouncing right off of my EMA lines. Absolutely no resistance whatsoever here. So this is how I use the support area to give me that indication, right? There's massive movement, totally shifted direction. All right, but I also know that the majority of the move has been going down. So if this does not last, it's okay. And it looks like it's coming to an end, right? Because now it's giving me a mini resistance area. And like I said, I am very loyal to my resistance areas because they're showing me areas in the market that are slowing down. As you can see right here, look at the MACDs. They are completely in divergence, right? They're showing me that there is a lot of loss in the market. And look at where the actual balls are accumulating, all around my zero line. So the way the MACDs work is the zero line is neutral. There's nothing going on. So if anything below it or above it, that's where there's the majority of that strength. Okay, so right there, you see that? Boom, look at that. It showed me that it's not going anywhere. But if you're not keeping up with the resistance support areas, you might continue going in for longs, and guess what? It will be stopping you out. And look what happened here. It's exactly that. It changed direction because the overall momentum had been going down. And when I am looking for this, I'm seeing this change. I'm seeing all over this. I would be all over this particular trade right here. That is a trade because it came back to my area, came here. At this point, it's just going back down. I love that it's going back down. But I also remember that there was a support area from before. And I also know that the market revisits those areas over and over and over again. But when it finally breaks, I want to make sure that I am all over that particular trade, right? And look at what happened here. It did break, right? But it was a fake out breakout, and they happen. And when they happen, sometimes you just end up losing, and that's okay. But sometimes they just continue on. And that's when we are all over the breakout trade. And now it's continuing on beautifully. I would be all over this particular trade right here, all over it. No divergence at all because it shifted direction here. Look at that. Gorgeous. And you continue on. This is how we read breakouts. This is how we read support and resistance areas and understand what is happening. Right here, it tried to go up. It just became really grindy, not going anywhere. Tried to go down, didn't really go anywhere. Continued with that resistance area, right? I also know that I should probably not be entering into this market because it is a significant area. And if you look here, now this is a pretty significant support area as well. All right, and boom, look at that gorgeous breakout right there. All right, do you guys understand how I'm using the support and resistance areas? Because without them, you cannot spot your good, serious trades. They will be really, really difficult to find. All right, guys, let me know if you have any questions. And like I said before, hang on a second here. Let me actually stop sharing. Here we go. All right, so like I said before, you could get my entire presentation totally for free, makingofadaytrader.com. Get your cheat sheet here. Okay, it's literally the presentation that we just went through pretty much. Oops, hang on a second. Oh, hello, did I just stop sharing? I did, right? All right, hang on a
Yeah,
sec.
it did turn off.
There we go.
Okay.
Okay,
Now it's
I
coming
wanted to
back.
press the chat. There we are. All right. Oh my gosh. Now that I don't have a mouse, my computer mouse sucks. All right, guys, thank you so much for everything. If you have any more questions, I am here to help answer. And again, like I said, everything is from here. It really can be really simplified. Makingofadaytrader.com. You can get your entire presentation and the cheat sheet that I use. And let me know if you have any questions at all, please. And thank you so much for having me again here.